Start. Hey, welcome to the Don't Be That Guy webinar series from Bering McKinley, part of the Bering McKinley Vision Podcast series. So glad you're here. Glad you're watching. As you remember, this is just a place where Ryan and Josh and friends just talk about topics that are interesting to us. You will get an email in about 5 to 10 minutes if you're watching this live. Otherwise, it'll hit your email box at 11:05 Central Time. We are recording a little bit early today. And we've got our friend Nicholas here, who's going to be talking to us, going to kind of lead a conversation around cash flow, something that I think Ryan and I can both very much relate to as business owners, and we know our MSP friends can sometimes relate to it very heavily. Just a reminder at the top that this is going to be the recording of this gets over onto the YouTube channel. So find us over at Bering McKinley, and we're just gonna have a good time here. So Nicholas, you and I had a conversation on the From the Trenches webinar a few weeks back. I don't know if that's dropped yet or not. Do you know if it's dropped yet? I don't think it has just yet.
But honored to be here, honored to be considered a friend. And yeah, for those who don't know, my name is Nicholas. I'm the partnerships manager at Alternative Payments in the corner here. And we're really excited to kind of chat about all the stuff related to cash flow that we kind of see with the partners that we have. We currently work with 700 plus MSPs across the US, just opened into Canada recently. And then we're on track to process about $1 billion at the end of this year of ACH and credit card for our kind of collective customer base.
It sounds like a lot to me. Ryan, have you processed $1 billion in your entire career as a business owner?
I did that last Wednesday, Josh. No, for sure not. Definitely.
Yes, right.
But it's good to have goals.
That's I was thinking about it. If a guy like just works like a normal job, makes $100K a year for 20 years, made $50K for 20 years of his working career. I mean, what do we make? A couple $1 million a year in our entire lifetime? That's not, boy, that's kind of sobering when you see lottery tickets at a 1.8 billion, knowing that we're going to work our whole lifetime and make a couple million in our life. It's pretty crazy.
The stat that I've been reflecting on recently as I continue to grow older and pay more taxes is that my entire life's of contributions to tax may only cover like one small substructure of a submarine, vessel. And all of us contributing together that is able to, afford all these kind of things. And that just is hard for me to believe.
In Canadian, you probably had some visibility, but not a ton when the Obama healthcare initiative came out, and they made this portal where people could, process and apply for insurance. And somehow it just turned into a big debacle. And I don't remember what the number was, but like the website didn't work and they had paid tens of millions of dollars for it. And that's when I had that realization, Nicholas, whereas like myself and everyone I know, the amount of taxes we'll pay in our lifetime will not pay for that website. Like it's like, oh my gosh, or a day of ammunition in some bullshit war won't even cover that. So it is staggering to put it into scale. So like $1 billion of payments process is just, we're used to saying the word billion, but it's an it is an unfathomable amount.
Yeah.
Unfathomable. And now, did you say that's annually or just to date, Nicholas?
So essentially we see ourselves on track to finish 2025 and have processed $1 billion in payment.
For sure.
I think the immediate reflection as soon as we heard that, presented by our CEO and operations team as a company was, holy crap, that's a lot of pressure. We're not making, tools to help teams message back and forth. We're responsible for these owners and their team's cash flow and the blood of their company. So, as a guy coming from a small business background, I certainly feel the pressure in this job and, at this company. And, we take that very seriously, or at least I think we do.
Yeah, I think we do. Well, it is, when you think of it that way, like that $1 billion is made up of a $300,000 MSP who needs that $7,000 deposit to hit as quickly and as efficiently and predictably as possible to, get home and pay himself out of that business. So no, that is a very, very sobering kind of realization on your CEO's part and y'all's part that is each dollar goes to someone who probably needs that money to come in.
Yeah, absolutely. There's there's plenty of people down the line who are relying on this in order to hit payroll. And then the people on the other side of that payroll are relying on it to, pay for education and housing costs and all these other important things. So we got to be really careful and really thoughtful about the features that we bring in so that it, works with the cohesive thing, but then, continue to just try to refine it and do what we can to help. Because obviously if we can join a business and make a big impact on their cash flow, get them paid 10, 20 days earlier, the level of trust that we're going to win with those folks is going to be pretty significant. And, they're gonna be pretty excited to be a part of our journey into the long term.
Ryan, we all know, and listeners of the pod know, your business model was a lot of projects, a lot of hours.
Yep.
You're doing invoice on. Did you guys use any sort of payment processing or automation in your invoicing?
So in the beginning, we didn't. And then eventually we were checks only because I didn't want to pay that 3%. Right.
Huh.
And then later on, the market put pressure on us to accept credit cards and things along those lines. From an automation standpoint, it was ConnectWise syncing with QuickBooks, like the pretty standard setup, nothing fancy there. But the one thing I would be remiss not mentioning right now, as we frame this conversation around cash flow, is something a mentor of mine once said. A company can be profitable all the way to bankruptcy. And for those of you who don't understand that yet, it has to do with cash flow. Your books can say you have all the money, but until it's in the bank, you can't spend it.
All right. Facts. And, I love the sentiment of, I didn't want to pay that 3%. As the market put the pressure on you to move towards this scenario, how did you eventually handle that 3%?
We ended up giving cash discounts on invoices because you can't add the percentage, but you can give a cash discount. And so people got to choose then.
That's right. And how did were people more addicted to their credit card points, or were they more concerned about,
they wanted the points. And I was so I just got hit with like a $54 credit card charge on paying one of my utility bills. And I'm like, something, I'm going to do a little experiment and figure out if I spent that $54 and just went and bought miles, like how would that make that difference? And I have a feeling I would be better off buying the miles.
Well, my brother-in-law, Mark, leveled up my game on points.
Okay.
So you've got the kind of earn rate, which is like a penny or sometimes less per dollar spent or whatever it is, or 2 pennies. And so he said that's interesting. But he said for most people, it doesn't matter how they earn. They're going to spend and redeem at such a terrible rate.
Okay.
It doesn't matter. So I don't know how much nerding out you do on this, but you want to get at least 1 cent per mile redeemed.
Okay.
That's kind of like, if it's less than that, then it wasn't worth it.
Okay.
The nerdiness comes from trying to get that to 1.25, cents per point, or 2 cents. So like when you see somebody at Walgreens or CVS using their credit card and that little thing comes up, hey, you want to pay with your points? You're going to get like a half a cent or a 0.25 cent on that. So the redemption of them is where the magic happens with those points. So those folks, like you said, if you're not going to spend them at greater than 1 cent, go buy the miles.
Right.
And people have gamed the shit out of this. It's hilarious. There's like whole communities, Nerd Wallet and all these other things where people are constantly comparing. Have you been exposed to this, Nick?
Yeah, I'm a fly on the wall for this conversation, and I'm just thinking like how crazy it would be if you had no context for any of this and you just were like an alien who showed up and you just like ridiculous system imaginable. So in Canada, I think more people are into the cash back. So 2% you get cash back.
Yes.
So just like back up, even if it's points, pay a 3% fee to process the money, and then you give the person 2% cash back as a discount.
That's right.
This at a fundamental level does not make sense.
That's exactly right. And they hope that there's not enough nerds who get into it enough to game it. They're like, oh, most people just be happy to get their $75 check or credit card statement.
Right.
No, that's exactly right. It does not make a lot of sense.
But we all
So-
love a good arbitrage story, don't we? And like, have you
oh,
heard the story of the guy? There was a special deal at a special grocery store for pudding, and you'd get more points value than the pudding was worth, and the pudding
oh,
itself was on sale. And so he bought enough pudding to essentially fill his garage and have
yes,
miles to last a
yes,
lifetime, and then
yes.
donated the pudding as a tax write-off.
Uh-huh.
Nice, 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 nice. Yeah, that in that credit card, world, arbitrage is definitely a right word. Another word that they use a lot is structured. So they'll do structured buying. Well, they'll know that at Walmart I can buy a $800 American Express gift card with my American Express, and then I can get the points from that, and then go and cash that card and just pay that $800 back. So I got the points with no dollar spend. And that, you understand what I just told you?
Mhm.
That's what my brother-in-law does, and he does it to an epic level. We're talking, multiple tens of thousands of dollars a year of just, I buy this, I get my points, I get my cash back when I return that thing or sell that thing. It has to be your hobby. Like, he has massive spreadsheets, and Ryan's eyes are crazy, man. It's great. He's got so many credit cards, so many credit cards. It's like, I'm buying, $50,000 worth of Dell. Well, I'll use this credit card to buy the Dell stuff, and then when I sell it, or when I buy it, I'll also get this big rebate, and I'll get all those points. Like, his end game is those points constantly. So yeah, man, it's Ryan. This thing is built for you. This structured buying is built for you.
Good. Okay, we should get back to some IT stuff.
No, hell no, man. People
Fair.
are way more interested in this than their DSO.
I'd be really curious to circle back because Ryan, you said basically I felt like I got forced to take credit cards, even though I
Yes.
start with just checks.
Yeah.
Then you said like, oh well, the market kind of demanded that I eat the fees, which is like
Yeah.
kind of the terminology I use. But interestingly, like we fast forward to now, and I would say about 90% of our customers currently pass on that 2.9% fee.
Yes.
The attitude and the way that we pitch it is we say to folks, well, what you need to do is you need to offer options. And so in the alternative payments world, there's 3 options to pay a given invoice. You can pay by credit card, but you're going to need to eat that 2.9% fee. Here it is. Like, we're not going to hide it from you until the very last screen of the checkout. Like, we're going to be very upfront with you.
Yep.
Alternatively, no pun intended, if you pay by ACH, no charge for anybody, like
Yeah.
completely built in, super easy, right here. And then the third and final option, which is kind of like, for specific use cases is, hey, how about we finance that bill? And, you can pay it over 5 months or something like that.
Right.
We'll pay the MSP immediately, and then we'll take on the risk of the finance.
Yeah.
Then you're not like kind of overwhelming people with this fee. You're kind of saying, hey, there is that option, but I need you to take part in all the extra
Right.
I have to take on because I shouldn't have to do that.
What I love that finance piece. You let me know about that, Nicholas, a couple months ago. Do you have data that can tell you how many people actually use that function? Is it a very small percentage of MSP clients, or is it growing? Is it large? What is it?
Yeah, that's a really great question. I would say that ultimately it's a very small percentage of folks that actually use, but the value of it isn't necessarily for people to use it on a regular basis. The value is really to have it be part of that whole options piece where you're saying to customers, hey, something that makes my MSP a little different than the other guys is that I have this tool available. So, we're getting into this relationship. We've set up this kind of proposal for me to take care of your IT work, but we both know something's going to come up in the future where, you've got that unique project and it's going to kind of hit you because we're going to need to upgrade a bunch of equipment. By the way, when we come to that point, there's going to be this financing tool that my company will be able to provide to you that doesn't require you to do a hard credit check and, kind of leave our system in order to do it. I think sometimes a lot of our customers are able to use that as like a value add to add onto their relationships. And it doesn't necessarily get used, but knowing about it is beneficial.
That makes sense. That makes sense. Are you seeing like what do you get insider data on just kind of some general AR numbers across in the industry on like over 60 days, over 90 days? I don't know how you guys get insights into that, but do you have some insights on that?
No, we're big data guys. I probably have a little bit too much of a bad history because of my background in small business of kind of just running it off the seat of my pants. To be kind of diligent about getting into the numbers, but our operations team, the guys over in New York, are really great about kind of making the most out of all this data we collect.
Mhm.
Especially because, you know, we get this great before and after picture for customers that move to our system where we can say, all right, before you were getting paid over this many days, and now, 3, 4 months into alternative payments, you're actually getting paid 40, 50% faster. And here's the
Mhm.
impact that's going to have if this continues over the year.
Mhm.
Or like simple things like activation rate. All right, before us, you were using this other system. It was kind of clunky. The users weren't really crazy about it. Only 30% of people used it.
Mhm.
Now you're an alternative, you're 4 months in, 60, 70% of your customers pay their bill through our platform. And like, here's the impact of that from a cost saving perspective. Here's how many checks you just took out of the flow that you don't have to go manually deal with anymore.
Right, right. So is there a story you can tell about the AR or collections or kind of landscape out there for MSPs? Do we typically live in a everyone gets paid, 90% of it's in 30 days or under, without alternative payments, I should say. But do we see an AR problem in MSPs? Does your data suggest an AR problem in MSPs?
Yeah, absolutely. I mean, I think the data kind of suggests in North America in particular, there's a AR problem in all B2B payments. You know, like I think a lot of B2B businesses would dream to have a more traditional B2C relationship where customer buys the pizza and then they pay for the thing at the POS machine right away. Um,
Right.
you know, if you compare those two together, they're pretty stark in their differences and their impacts on cash flow. But that being said, you know, what we do know about MSPs today is that on an industry average, they're paid 20 days after the due date of the invoice
Oh, really?
by like a net 16 term, which means in total, you're looking like 36 days after invoice creation date, which is very, very long. Now, not everyone's going to fall into that, right? This is an average, of course.
Right.
But if you were able to, you know, essentially move those folks onto a system like alternative payments where we can automate that process and ideally set customers up on an auto pay for their recurring billing, you know, you can drive that down to 3, 4, you know, potentially even 0 days.
That's the story. Like I can be a little naive sometimes, and since we've been using, payment processing automated for, a decade plus, I I get enough anecdotal evidence from existing clients that it's like, oh, that's just table stakes now. But I'm always shocked, and it shouldn't be, when I come into a new client environment and it's like, you've got a real AR problem. So I have to say, Nicholas, I thought this was kind of yesterday's news that everyone has solved this, and it's of course you do ACH and credit card, but man, it's not there in my more recent observation.
And I think it kind of makes sense in a way. You know, if you imagine the average MSP owner here in North America, you know, maybe they started quite a while ago. They were on a break fix model, you know, which is
Mhm.
very hard to imagine today. And we're very much past that for the most part.
Mm.
But that doesn't necessarily mean that they improve their billing kind of approach through that process of moving towards recurring revenue. And so, you know, we're here today. Obviously, MSP owners don't really get into the business necessarily for the finance side. I think on average, these are the kinds of people who are really excited about tricky problems and building great relationships. And
Yeah.
so, you know, finance is often something that gets left to, you know, kind of an afterthought or the thing I'm going to get to next quarter.
Yes. Ryan, you would move some pretty serious projects.
Yeah.
In fact, I know you were sharing last week. You guys are in the middle of a huge project with your new firm.
Yeah.
How did you ever find your? Not obviously we found ourselves in cash flow problems, but are there some scenarios that kind of just kept resurfacing over the years at Alter, or did you find that you just got stronger and stronger at every year? Or would you find yourself a couple times a year in a weird spot because it's a big project or something?
Yes to all of the above. I found us getting stronger every year. I found us lines of credit are a tricky thing. Bankers always seem to forget to renew them for some reason. And so if you're not diligent on those, you're going to find out when you need it the most that, oh, they forgot to renew it and they don't care. It's going to take 30 days to renew your line. Of course, that's when you're going to need to order $500,000 worth of hardware. And so you're scrambling. This is where down payments started coming in. That was one of our tricky things that we did, was starting to get down payments that would normally cover the hardware portion of the job up front so that we weren't outflowing that much cash. We also had an audio visual company that was kind of attached to our MSP. That made everything even more difficult because audio visual and IT have exactly one thing in common. They run on electricity, and that's it. Like, I thought, oh, audio visual IT, they're going to be the same thing. I couldn't have been more wrong. And what you find with audio visual is it's 90% hardware and like 10% labor. Or in the IT space, I was normally 50-50. Okay, so it's hard to get 90% of your project up front to cover your hardware. And so it's a combination of things from a finance standpoint. It's running to the line of credit, running to the deposit, and then sometimes running to your own bank account, making sure you're documenting this to pay yourself back an interest rate type of thing. But as you get bigger, I feel like cash flow becomes trickier. When you're a $200,000 MSP, like, you're pretty much billing stuff out. You probably don't have that big of a payroll. Like, cash flow, unless you have some really bad clients that you need to fire, normally the clients are paying you pretty much within that 15 to 30 day period. And if they are, then that next period you're catching up, and so there's always a period that you're in. But when you hit that $1.5 million MSP and up, you're starting to do some projects that might approach $500,000. Okay. And then you're wondering, where am I going to come up with $200K for hardware? And that's when you got to start really paying attention to this.
Right. Yeah, yeah. And as you grow, like you say, you kind of get exposed to bigger opportunities. Now, how about this one, Nicholas? I'm literally at a client's office right now, and we were just kind of ramping up into a conversation about the municipalities that they serve. And we were just doing some profitability analysis on a half a dozen of their clients. And I was blown away. I was like, these are really great. We hadn't gotten to the point of what's the cash flow look like with a city, with a police department, with a school, and their payment kind of nuances. Have you run across people's stories around just the difference between working with a small business as a client versus a municipality or a school or some other?
Yeah. No, that's a great question. And I think the version of this that I hear the most often is, well, look, like, I love the idea of your system, but honestly, a bunch of my customers are on checks and they're never going to leave.
Mm-hmm.
And they kind of say that to me in the sense of like, oh, well, this is just a moot point because, I got these guys and I'm never going to convince them to not use check.
Right.
But I mean, ultimately, I don't really see there any point to having an edge case drive the policy for the entire AR, right? And so sure, there are likely going to be partners, especially for slow-moving bureaucratic groups like municipalities, or maybe healthcare-related groups that have really specific, systems that are related to security or perceived things like that. And you're just going to have to eat the bullet, and you're going to have these weird edge cases. But the point is like, if you can get a system that's more automated, that's more cleanly kind of set up, then you can set the tone for all the new customers that come in, and you can really fight to try to make them come onto your program versus making exceptions to them.
Right. I'm reminded, and I wondered, Ryan, did you ever go down the Bill.com maze?
No.
That was a trend in the kind of early 2010s, and obviously it's still around now. But and are you familiar with Bill.com, Nicholas?
I am, yeah. We do come across it. It doesn't seem to be necessarily super MSP specific, and I'm
No.
not sure what their original kind of competitive edge was in 2010. So I'm curious to hear this story.
Yeah, it started out, and I'm not going to be 100% accurate here, but it was very much hey, business, pay your bills through bill.com. So if I wanted to, I could integrate with my QuickBooks, and it was a good AP system. But on any side of an AP, there's an AR. So if your vendor wasn't bill.com as well, it got really messy. Then we started seeing our MSP clients use it as an AR led initiative as well. And it just turned into a big, messy rabbit hole. But I didn't know if if you faced it, Nicholas, as we run across a guy that says he has bill.com and we have to tell him a story about, where this is better. It doesn't sound like you face it much.
No, we certainly have. I think that they fall into a bucket of kind of the non-MSP specific, like they don't have the kind of PSA integrations and stuff like that.
Right.
And, they're kind of more on the generic processor side. And so we've quite successfully, with people that were making that switch. But I do think there's something interesting in that conversation that you're mentioning about AP, which is, maybe 2010 was probably a little too early to try to be tackling that beast on that scale. But now we're kind of seeing a much bigger push to cleaning up AP and bringing it online. And, alternative payments ourselves are working on initiatives that we hope to launch in 2026. Because right now, we are the AR, kind of automation system of choice, I think, and have really kind of built out that reputation. But to fully close the loop, we need to also be in charge of taking care of how the money leaves the account.
Right.
And, ideally, we could track a dollar, so to speak, very cleanly of the money coming in and how quickly it takes and how smooth it happens. And then also know where that dollar is headed afterwards.
Mm-hmm.
Especially in the MSP context when there's so many vendors that you folks are juggling. My dad and his local storage business doesn't have nearly the scale and complexity of unique vendor kind of relationships and, billing contracts. So there's a lot of opportunity there.
Hey, Ryan, how many vendors you reckon you worked with at your MSP? I never thought about that, Nicholas. That's an interesting point.
So the interesting thing is, as soon as he said that, I was thinking about this, and I'm like, 10?
Yeah.
Like, I didn't have a lot. We did Dell, we did Cisco, like we had our firewall with and our Ingram account. Like
Mm-hmm.
between Ingram, Dell, and I'm adding at least 5 that I just can't think of off the top of my head. But I mean, we pretty much bought mostly through just a few vendors.
What's interesting is, I spent the first, 2/3 of my career driving, the MSPs towards get a distribution network, work with one, grow your value with them, get the discounts from them. And man, that story doesn't get heard the same now. When I think of an MSP now, it's like, yeah, we buy a little from Ingram, we buy a little from here. Pax8 seems to be the big one for their licensing, but I see guys now like, well, we've got an Amazon business account, we use Newegg, we use CDW. Like they are getting so much price pressure that the value of that distribution model that you and I came up on is getting a little more diminished. I don't know what the P&L or financials would look like for Ingram today. I'm sure they're just fine, but I am seeing people buy from way more sources than would have been encouraged, 10 years ago.
And even like outside of the hardware side, there's also just, I can think of some MSPs that might be getting close to 7, 8+ cybersecurity related. Like, I'm a compliance guy so that I can make sure people are in compliance. I've got the Huntress for this. I've got the, browser specific, the email specific. Like there's all these different vendors. And, folks that are moving to the bundling model, like you see that with the big groups like Kaseya offering their Kaseya One product. But even in that scenario, yes, it's one price that you're paying, but bundled inside of that are all the different services that need to be tracked appropriately so that you make sure that you're not being overcharged or that you're being charged what you thought you agreed upon at the start. And so having a system to manage that means that you're just kind of juggling it in your head and then often finding problems 4 months after the fact.
Yes.
Yeah, that's a huge, huge issue. Just that license reconciliation. And I would say just making up a number, maybe 30% of the MSPs you work with feel really comfortable that they've nailed the formula. of like, oh, we've got our PSA set up well. It's talking to our vendor really well. We can trust the number. We've got good alerts and workflow. But the rest, I think there's probably a lot of phantom licenses being paid for that are kind of hard to track down for folks. That's a good call on Nicholas. What is, I mean, you're a good banking relationship guy. What is the role of, like, when you're going for that line of credit, when you're trying to build that relationship with a banker? I can imagine looking at the balance sheet. I can imagine looking at the P&L. How much conversation gets put into accounts receivable? How much pressure gets put into, or attention gets placed there?
Well, I think that a significant amount gets placed there. I am really big on the relationships with my financial institutions. I like to have 2 or 3 that I'm always courting. And like, for examples, for like right now, we just landed about $2 million worth of work. And I'm going to need lines of credit to purchase equipment, and I want to be able to shop around for that. I got to have my company tight, if you will. They don't want to see things sitting out there 180 days that have significant numbers next to them, right? Like, okay, a couple grand, okay, on 200K worth a month of invoicing. Yeah, you're going to have a little bit of slippage like that, but they don't want to see 50, 60K sitting in that. And so the sooner that you're getting that money in, the sooner you're going to be able to pay them, and that's what they're looking for.
Right. Makes sense. Makes sense. Another area that MSPs tend to struggle is in just the hygiene of the accounts receivable report, where it's, somebody overpaid a bill for $500. Well, there's a very specific accounting process to handle that.
Yep.
Unfortunately, it kind of defaults, and suddenly you've got a negative 500 on an AR report. And then you multiply that by 15 times a year where something like that occurred, and that AR report just becomes, unreadable almost. So Nicholas, when you guys are working that cycle of getting people paid, where are the boundaries for you all? Where is it just, was it accurate? Did it get billed correctly, and did it get paid correctly into the deposit account? Is that kind of the 3 steps that you're mostly accountable for, or do you take some accountability beyond just that?
Yeah, that's a great question. And I think we're in a unique case because we're basically coming in at the very end of the journey. And it might be worth describing the journey from start to finish, or at least like, what I think most MSPs should want to work towards, which is kind of like a quote to cash model. So let's imagine, Josh, you're a new customer of mine. I run an MSP. I wish I didn't, because I don't know what I'm doing. But in this context, we, agree on a thing. I send you a quote and I say, hey, if you agree with the quote, here it is. And as soon as you sign that quote, we take your payment details and we set you up on a recurring monthly kind of payment schedule where we're going to take X amount of money from X bank account on X day for 12 months as per, the details of this contract. And from that point forward, you're just kind of set up in our system. And so then you're going to go and you're going to enter the PSA so that you can be tracked, from a kind of operation standpoint. And then the data that's brought out of the PSA is going to head into your accounting software. Let's say that it's QuickBooks. And QuickBooks is going to be able to say, okay, here is all the information from the PSA that generated this month's invoice. And then at that very end of that journey is where we're jumping in and we're reading both the PSA and the QuickBooks to say, okay, cool, we've got the invoice. We can see where that data came from in the PSA. Now let's go out and run the process to actually get that bill paid, and then go to the invoice in QuickBooks and say, hey, QuickBooks, this was paid on this date in this way. And so like that whole flow from quote to cash, we are only joining at the very end of it. And then our responsibility is making sure, 1, to get that money as efficiently and quickly as possible. And then 2, make sure that the 2 most important systems are appropriately reconciled, the QuickBooks or the accounting, and then the PSA side. Now, people end up with very unique kind of workflows with, little differences all the way through. But on the whole, I think that's a really good representation of kind of how it flows and where we come in.
So that's a gap that we've experienced at Bering McKinley, probably more times than I even aware of. But there's one incident that really, if we had been thinking quote to cash very much more formally, we may not have found ourselves in this spot where send the proposal, signs it. Well, our proposal at that time didn't have any sort of link to say, go ahead and pay this now. It would be maybe a link in the email from ConnectWise with the first invoice. It said, click this link, go to our payment processor and set up your account. Like that delta right there. Well, if they didn't do it, we didn't get triggered alert saying, oh, they never actually did that. So in this case, it was, they never clicked the link. They were getting the bills. We didn't have them set up for automated payment. We just watched their AR slowly grow and we weren't paying attention at that time as closely as we should have. And it got up to $60,000. And then when we started trying to press, it was a big fight. And it's like, obviously they weren't awesome people by not just trying to pay their bill by check or something else. But the area that first step of, I sent you my proposal and you're saying quote to cash, does Alternative have a means to say, hey, you see your quote, go here now to set up your account?
Yeah, so our version of this is through the integrations we have with our MSP kind of partners, like the other SaaS companies that are working in the space. And so there are these like quoting specific tools like Quoter and QuoteWorks that we integrate directly with. And so we can achieve that, direct quote to cash kind of flow. And I think you bring up a really great point. And I kind of maybe liken it to a sales process where, a really seasoned salesperson knows that the death of, any good momentum are these little breaks that don't need to be there. And like, how can I remove those breaks? So how can I call you on a phone call and then get you into a demo and then get you onto a contract? And any of the steps and gaps between there have the same level of consequence as what you just described in the AR process, where, yeah, we talked on the phone, we had a meeting, they agreed with it, I made a quote, but then we had to send the quote to the team to make it into an invoice. And then we had to have legal come and send the contract. And, someone was away on vacation. And so 3 different gaps of different times entered the process and gave 3 different opportunities for that person to change their mind and just get out of it and
Right.
interrupted the momentum of getting them onboarded.
Yes. Yeah, no, the gaps in the process. So we eventually, with the tool that we were using, figured out how to get that link embedded into the invoice and they could make that initial payment right there, thus getting them into the system. And, majority of people did that and it had nice workflows to trigger into ConnectWise. It had been paid and that was our trigger to launch the project or the engagement. That's pretty cool. But I that was probably just, 5 years ago. Is that table stakes now? Is everyone doing that? Is everyone doing that immediate expectation with the client to, hey, got the quote, sign, get your payment in?
No, I think we're well behind getting a proper level of adoption, especially considering just how many positive impacts it's had. And, some of it comes from the stuff we talked about before, where this isn't always a top priority for a given MSP owner. They've got a lot on their plate, they've got a lot of responsibility, and, different things just keep taking top priority. But then the other piece of it is there's a bit of a hesitancy as well because, people are nervous. And I think it harkens very similarly to the, oh, I don't want to pass on a 2.9% fee. It kind of feels inappropriate. I don't want my customers to think I'm trying to nickel and dime them.
Mm. And for the money feels awkward.
Yeah, or just being more aggressive with the terms of being like, hey, the contract says I'm going to take this money out on this day. And I think they have a little bit of a hesitancy, and hesitancy just leads you to saying, oh, next quarter, we'll deal with it next quarter. But ultimately, like what we're trying to encourage people by showing them like clear data is no, this is actually appropriate for both ends because it gives more clarity and it sets you up for a really good relationship from the beginning. And, that's the most important thing. It's just being really clear and setting the table and the expectations for that kind of long term. And so I don't think it's a negative thing to be concerned about, but we definitely see that hesitancy.
Yeah, I'm going to take a guess that 80% of the people who listen to that last 3 minutes are going to say, "Not me. No, that's easy. I got that." I think that, and that's probably true. But I'm really excited for that 20% who really does feel uncertain about that process. That hopefully they feel really empowered by that. Ryan, what when you think about that quote to cash, you're not shy about asking for the money. This is not a thing for you. Did did you eventually get to a place where it was smoother and more automated, or what was your flow? What was your comfort in your flow as you kind of reached full maturity in that area?
So I was thinking about those gaps that were just mentioned, and I was thinking about one of the ways that I I was cringing as you were like, and so so's on vacation, and I can't get. I'm like, I just sold you something. I want you to sign this quote now. Like, I don't want to wait for my inside salesperson to be putting this quote together. And I'm over here playing with one of my MSP's pens, and I would always have that paper document even with me. And this is old school. I recognize that. But I would be like, oh, so you're good? Okay, here's your pen. Here's your pen. Sign it now. Right? Like right now. Oh, and by the way, if you want to give me a check for the half down, love that too. Okay. I was very forward with this, but I always had that like, well, I want to get this job done for you as fast as I possibly can and as efficiently. So, like, clearly, why wouldn't you want to do this? Right. And then we all go through different bookkeepers through our life cycle, and sometimes they're good and sometimes they're less than good.
Right.
And you don't always realize that till they're gone. And I have had many stages of business over 20 years. And I just have to tell you this one story because it's funny about the time that my bookkeeper withdrew all of the paychecks from all of our employees from their accounts. And the response is, well, the button for deposit and withdrawal of the paychecks is right next to each other. I'm like, why does that button even exist?
Wow. So they could call the paycheck back in.
Oh,
dang. No. So all these people just got paid, then it came right back out.
They didn't get paid. We only withdrew their paychecks.
Meaning you took money from their account that they never even received. Wow. That's terrible.
It was horrible.
Wow.
I overdrew most of their accounts. There were fees involved, and like my bookkeeper just submitted her resignation the next day. I'm like, you're not even going to help me fix this? And she's like, no. And she just left.
Yeah, I mean, I don't blame her. That part doesn't bother me. At least you didn't have to fire her because you probably wouldn't have fucking fired her.
I probably wouldn't have. I would have been like, did we learn from our mistake?
Man, taking money from an employee's account, because our employees don't have 100,000 in the bank, right? That money means something.
Exactly. So talk about cash flow and disrupting their cash flow, right?
Yeah.
But this goes to show, like, there was a period after that quote was signed for that maybe down payment invoice that it relied on people who weren't robots, right? They were less than perfect. Okay. Right. And sometimes they withdrew payroll. And so making sure that I kept an eye on, okay, so did we send this invoice out? Did we? And sometimes you're like, how did we miss sending a $150,000 invoice out last month? It happens.
Oh yeah. You put it, you add it in there really well, when people are on vacation or when something else interrupts them. That's Nick. I'm going to give you a product development idea, Nicholas. All right.
Bring it.
Now, okay. So you quoter, sell, whatever we do. If there was a way for that quote to finalize in alternative payments to say, here's your checkout process, where it's the transaction isn't complete until they've entered their information. It has never even occurred to me that quoting and AR automation, boy, they really, I mean, we've married them together with the embedding of the link in there, which is awesome. But wouldn't it be amazing if that quote could end up in the alternative payments, ecosystem to say, process your way out of this transaction the way we do it for anything else we buy online.
Yeah.
Gotcha.
Yeah.
And it feels similarly to that. So, like, to clarify, you receive this quote from quoting kind of tool integrations. There's the billing link at the bottom.
Yes.
That billing link is tied to that specific person's, kind of details and has, their first invoice, so to speak, or if it's a product, the whole invoice. And then they're going to go and you're going to create their alternative payments account with the single sign-on and all the security and all that.
Yeah.
And then they're going to pay that bill, and we're going to capture that billing information and attach it to their account so that going forward, everything is going to be set up. So it is that kind of complete flow.
So I get that part. The part is, though, they can sign the quote, but never click that button, true or false.
I see.
That's the part where it's like, hey, with no ill intent, it's, oh, I missed that part. Yeah, it's going to come. I'll forward it to my bookkeeper to do that. I'm just signing it. I think that weird gap of, do they click it? Now, you have data that says 99.9% of the time they do it in one transaction. If that's true, then it's a no issue. But it's really interesting to think about, how could that flow not require anything other than just them hitting next, and following the steps through.
It's a great question, because I don't think I get a lot of visibility into the onboarding process. Or I'd be curious to know, I'd actually just be curious to go through the experience of being a medium-sized business that hires, a well-run MSP, and what they do to onboard me. I was, at your event recently, on Monday, and a gentleman was talking about his sales process, and then he's like, yeah, and then we onboarded them. But I was like, oh, actually, I'm really curious what that onboarding is. What is it? Because he was talking about how he needed to go on site in order to really, get a lay of the land, to know, what needed to get done and all this stuff. And that would have been just the very, very beginning of that onboarding journey. And so is there a tool inside of these PSAs or elsewhere that can give this really visual kind of storyline to people and say, all right, we have started an onboarding journey and we are on step 1, step 2 is billing, step 3 is we need to get this, I don't know, contact info for key people. Step 4 is we need, this kind of technical information, and basically tell people, here's how we're going to get from 0 to super long-term trust relationship.
Yeah.
I actually don't have any visibility into that process.
No, I just kind of thinking of some onboarding plans that I hear my clients talk about or see their onboarding project. It's not jumping to the front of my mind that there's that step of, how do we get paid? How do we ensure that they're in the payment processing and, whatnot? Ryan, did you guys cover that?
Oh my God. So Nick, you and most MSPs would like an insight into this. Okay. So I've worked inside my MSP for 20 years. I've worked inside larger MSPs for a little bit after that. And I think that onboarding is a word that gets thrown around for, we're going to put you through some disjumbled mess of something, and eventually it's all going to work out okay. But we don't really know. What we did in our smaller MSP was we did a project inside ConnectWise, and you can do project templates. And so this was not terribly robust. I'll admit, it was get network information. It wasn't go to each component type thing. And I think part of the challenge is because MSPs have trouble charging a lot for the onboarding. And we shouldn't have that problem, but for some reason it's almost like a disease in the MSP space that we struggle with. And so what you find is we tend to stumble through that. And I think that we rely honestly sometimes on the accounting side to just get the information we need, whatever that is. I'm not saying it's the right way. It probably isn't, but it's not something that I found that we ever got to a level where I was super we are excellent at this. It was never there.
Yeah, that's so interesting to me. And I know this is very much off the topic of cash flow and well outside of my domain, but I think about onboarding a lot in my own role. So as a partnerships manager, my day-to-day really revolves around a referral program and encouraging existing customers to kind of sell our product to their end customers, potentially from a PCI compliant perspective and so forth. And one of the things that really helped unlock when we recently hired a kind of a head of partnerships is he was talking to me and really stressing to me the importance of a proper onboarding. Because at first I said, oh yeah, well, these are our customers. We'll just send an email and say, hey, we got a referral program. You should go check it out. But really, actually, you need to onboard even an existing customer when you have a new program. You need to kind of walk them through a series of defined steps so that for certain after the fact, when they're quote unquote onboarded, that they have all the things they need to do the thing that you're hoping to accomplish. And so if you translate that to, an MSP bringing on a new customer, there's a lot of value and importance put onto that onboarding process. The journey isn't over when the contract gets signed. To really set up a customer for long-term success and have them be invested to the point that they never open a bubble mailer in their life and never consider, leaving to go to another MSP. Probably a lot of that is going to be accomplished in that onboarding process and making people feel like, oh yeah, these are my IT guys. Like I can't even imagine going anywhere else after this experience.
That's there's another awesome marketing or client experience tool you guys can help people build, Nick, is
Jeez.
the financial onboarding of an MSP client. Because it is, I think that's, I've seen half a dozen, onboarding project templates, and I don't think they really, to Ryan's point, I think it was just Bookkeeper will figure it out. We always call that this kind of sales to finance handoff, but that seems like this pre-sale moment. But then the actual onboarding of the client is this separate event, and capturing some information, capturing some steps along the way to say, is the agreement set up? Is the payment portal configured and complete? I think that's a really cool kind of step that MSPs would very much appreciate, whether they're just doing it because it magically works, or if they got really thoughtful and intentional about it, what they can improve on. But yeah, and I think it's all has to do with cash flow, Nicholas. I think you're right on with these topics. It's anything that slows the velocity of the dollar is fair game here.
Absolutely. No, I totally agree. And I think, that's the space we really want to be in. The worst thing that anyone could ever, walk away from a meeting with us is if they were like, oh yeah, those guys, like, they process payments. That would be like the worst. That would make us so sad if that was.
Oh, man.
Oh, they seem really nice, a couple of Canadians, and they process payments. I guess they're like PayPal. That would really bum us out, because really what we want to be is we want to be known as this, like, oh, those are the guys who I trust to handle my accounts receivable.
There you go.
They automate as much of it as possible. They've got a great system for doing ACH and credit card. They even got a financing. They've even got collections. Like, they just take care of all things AR. That's our focus. That's what we really want to do for this kind of MSP space.
Well, I never would have thought about that, because I'm like, oh yeah, they do that payment processing stuff. So I could see from your perspective where that was.
Oh, Josh, no, don't say that.
Right? Well, it's the same thing at Bering McKinley. It's we've gone through seasons where it's like, right, we're just coming out of the season of people thinking, Bering McKinley, they're the people that fix your ConnectWise, and it breaks my heart. Yeah. Ryan, how about you in your MSP? What would have broken your heart if somebody defined Alter Enterprises as the people who
we can go get cables from them, or we can go buy a laptop from them?
Yes.
You would be completely missing the point of our business.
Right. I think we just captured the essence of marketing right there.
Yeah, somebody
want to perceive us.
The worst case scenario, someone says, oh yeah, Ryan sold me a $50 gold-plated HDMI cord for my TV.
Yes.
Yeah. Get all of them from there. I love it. Well, boys, I appreciate the conversation. I think we took what could be a really dry, not very inspiring conversation, or a conversation that people like to avoid or recognize, and made it something really fun. So I appreciate you guys bringing so much wisdom and fun stories along the way. Gang, any final words?
Thank you. Thank you very much for having me on. If anyone would like to learn more about our group, my email will be attached to kind of some of the show notes and whatnot.
Yeah.
And I would love the chance to chat with anyone who's curious. And, Ryan, pleasure to meet you as well. So thank you, gentlemen.
And anything left for us?
Just remember, the button for withdrawing paychecks and depositing is right next to each other. Click the right one.
Oh, yeah. Beautiful. Thanks, guys. Bye now.
Thanks.
Bye. And we're out. All right. Bye, Ryan.
All right.